Nick Downing is the founder, chief executive, and chief investment officer, like 3 titles of Overberg Asset Management. But actually, we've got a lot of history in the past. I'm not sure if you recall, but when you were working at Appleton,
Correct, yes.
you sponsored the very first radio show in South Africa, which was my show on SAFM. It was called the Appleton
Market
Power
updates
Hour, Market
or
Update was
power,
called. Yeah,
power
there
hour,
we go.
yes, I remember
Yeah.
it.
All those years ago.
Yeah.
And then we lost touch because you left Appleton very shortly afterwards and went off to start your own business.
So, yes, that's right, Alec. Well, thank you very much for inviting me to this interview. I really appreciate it. So, it's been a long time. So, in 2001, we took the decision, my wife and I and 2 young children, to move to Greyton.
Where's Greyton?
And Greyton is in the Overberg. And that's why we called this company Overberg Asset Management.
So now I can't ask you where the Overberg is because I actually also live there now with Hermanus. So it's that whole...
So the Overberg is that whole area. It stretches from Hermanus all the way to Bredasdorp, Caledon, Grabo as well as part of the Overberg. So Greyton is part of the same municipality as Grabo.
Why Greyton?
Well, it's the T-Waterskloof municipality. It includes Rivière-Saint-Laurent, Caledon, Grabo, Greyton, and there's so much investment required in Grabo, and Greyton are the biggest funders of the budget. But you should come to Greyton one of these days, Alec. It's full of potholes, nothing's working, and it's a disgrace, really. It was the jewel of the Overberg. I think it still is, but it needs a bit of a shake-up.
Is the governance?
It's the governance, it's budget, it's the allocation of budgets. So the budget that is available goes to Grabo for obvious reasons, because there's so much migration and lack of housing and so forth in Grabo. But it comes from Greyton and gets siphoned off to Grabo. Sorry, I don't mean to be complaining about this on this show. It's nothing much to do with global markets. But
my thinking is why... I can understand, I know very well why we have moved to Hermanus.
Yes.
Good governance, Western Cape. I get much faster bandwidth in Hermanus than I had in Johannesburg. I can work from anywhere in the world remotely. But why 20 years ago would you go to Greyton, which is far away from, one would have thought, any kind of connectivity, bright lights?
Well, very good question. There's a company in the UK called Perpetual Asset Management, and they moved in the 1990s to Henley-on-Thames, miles away from the City of London. And that was my inspiration. I thought if they can do it, so can we. We have internet connection, or we did then. It was a bit of the old dial-up connection, but it was enough to receive top research from London, from elsewhere in the world. We were a telephone call away from the stockbrokers in Johannesburg, Cape Town, and London. So, and really the big reason is that the commute is about 500 meters. So I walk to work or cycle to work, and it leaves so much more time to really focus on the important things, managing client investments.
Warren Buffett lives in Omaha.
Oh, another good example. And he's been there forever, yes.
That's interesting. You came to South Africa from the UK. You were educated at Cambridge University, which for many South Africans is almost a pinnacle of education. You clearly had the world at your feet. Why come here?
So after Cambridge, I worked in London for 5 years with Nomura Securities, a big Japanese investment bank. Then I came to Cape Town to do a MBA. So with a first intake at the Graduate School of Business at the Breakwater Lodge. on the waterfront. Why Cape Town? I have family from South Africa. So my grandparents and parents are from South Africa. And I always loved the country. And initially, when I came to Cape Town to do the MBA, I thought it would be a brief stint. But like happens to a lot of people, I've never left. But I love the country, all its problems. Regardless of that, I'm pretty sure I'd never leave South Africa. I love the people, the culture, the industry, entrepreneurialism. It's a fantastic place, so much potential.
And you bring something different to the investment market in this country in that you specialize, I'm talking about the offshore side now of Overberg, in London Stock Exchange listed investment trusts.
Yes.
Now, I love to find something different, something that isn't run of the mill, because there's so much of that, of people trying to be in the pack and not going out of the crowd. Your background in the UK, you're working at Nomura in both Japan and London. Did that give you an insight perhaps that South African-based people might not have had?
Yes, sure. So investment trusts, they're also called investment companies. They're closed-end funds. So they trade on the London Stock Exchange. There are 300 or so comprising the FTSE Equity Investment Index. So it's now quite a big index. 7% of the FTSE All-Share Index comprises these investment companies. So we've been doing it for the last 20 years. They're a wonderful investment mechanism, a very efficient, cheap way, and a very effective way for investors to get exposure to a global diversified portfolio.
How do they differ from unit trusts?
So unit trusts are open-ended. So when a new investor comes along, they need to create a new unit. And when the investor decides to redeem that unit, they need to sell shares in the portfolio in order to pay that investor back. With a closed-end structure like the investment companies that we invest in, there are a limited number of shares in issue. So whoever you're buying your share from requires another seller. And when you sell that share, it requires another buyer. So the share doesn't always trade at net asset value as it would do with a unit trust. So a unit trust, redemptions, creation of new units are always at NAV. With an investment company, it can fluctuate. So this index, the Equity Investment Index, we can look at the discount to net asset value of the broad aggregate index, and it's currently at about 16 or 17%. 18 months ago, it was at a 3% discount. So the discount has widened. It creates an opportunity. It also creates some danger for investors, because you can get a double whammy when markets go down, double whammy when markets go up. So it does need experience, professionals to manage that kind of portfolio. But it's a very good way of getting exposure to illiquid assets because of this daily trading that is facilitated with the London listing.
It's surprising to me that investment trusts have kind of gone off the radar. In South Africa, there was a time, certainly the old guys tell us that in the 1969 boom and bust, investment trusts were the whole rage. I remember as a young journalist in the 80s, investment trusts were quite strong in South Africa. There aren't that many around anymore. But the way you've described it and the way I remember it, if you want to buy if you buy a unit trust, you're paying full price, 100% of the assets. That's what you're paying.
That's correct.
If you want to get something at a discount, you buy into a closed unit trust or an investment trust. Mm-hmm. And as you say, now they're trading at a discount of 16%. So we all like to buy $1 worth of assets for 80 cents, or in this case, 84 cents. I wonder why they're not more popular in this country.
So there are a couple of examples. There's Remgro is a form of investment trust. Raynet is another one. I dare say they will become more popular in time, but both of those, Raynet and Remgro, trade at much wider discounts to net asset value than the 16 or 17% that I just quoted. And that is because they charge very big fees. So Raynet in particular, I think the fee paid to the asset manager is, well, I stand to be corrected, but I think it's anywhere between 1.5% and 2%. And it's a very passive management. There are 4 or 5 holdings, British American Tobacco, Pension Corp, a couple of others, and not really much goes on. So I think the shareholders, investors think, well, why should I pay 2% when not much is going on? Hence, the discount to NAV widens. I think currently on Raynet it's 32%. So there's another example in the UK, Pershing Square, the Bill Ackman investment company. It's very, very good, but also has quite a high expense for shareholders. They pay a total expense or a fee of 1.5%. It's quite high. But then other examples, Scottish Mortgage, which is very well known to everyone, having done incredibly well spotting Tesla and all those innovative shares a few years back, they charge a fee of only 30 basis points.
0.3%.
0.3%.
And they got you into Tesla at the start.
And they, exactly, plus 30% of their book or their portfolio is unlisted securities. And normally, unlisted securities, private equity, commands a much higher fee structure. So there are some incredible deals out there. And incidentally, Scottish Mortgage now trades at a discount to net asset value of 20%.
Do you own any in your funds?
We do, yes. Yeah, so it is one of our holdings. Pershing Square also. Rothschild Capital Partners, that's a 20 basis point fee, 0.2%. Incredible track record going back over, since 1988 when it first was founded. And majority owned by the Rothschild family. So we have pretty good partners there. So why, getting back to your question, why isn't it more popular in South Africa? I think it should be. There are fewer and fewer shares available for asset managers to invest in on the JSE. The pool's shrinking all the time, so there's a real opportunity.
And investment trusts don't just have to buy into listed companies. They can buy unlisted companies, presumably.
They can. They can invest in private equity, music royalties is another interesting one, absolute return, hedge fund strategies, renewable energy, infrastructure. And all of these alternative asset classes have very poor liquidity. And it's impossible to get exposure to those in a unit trust because they have to have daily dealing. And when they've tried in the past with commercial property, they've been liquidity mismatches. If there's a big run on redemptions and then they've got to sell a building and it takes months, even years sometimes, sell a building, then the unit trust just closes off redemptions for months on end. But with these closed-end companies, there is daily dealing on the stock exchange. So it really is an incredible way of getting exposure to these alternative asset classes.
How have you done? How have the investors in Overberg Asset Management performed?
I think very well. So we're not too adventurous. We are not trying to shoot the lights out. We're very conservative investors, but the long term, over 20 years, the annualized compound return in sterling is about 7.5%
Per annum.
Per annum. So that's an annualized. And It's
Don't,
obviously
don't translate that into rand, because it'll be quite scary if you think of the rand depreciation. And what kind of people invest with you?
all sorts. So we have large family trusts. We have youngsters who maybe have sold their business and they want to invest. Retirees who have put away a portion of their estate for long-term growth. And we provide income as well. So these investment companies have, some of them, incredible dividend yields. And so any retiree looking to get growth and income, then it's also a very good option for them. So we have all sorts of clients. And these are all private share portfolios. So
Only private individuals.
only private individuals, whether natural person or juristic person. But so we don't have a fund of these investment companies or a unit trust. These are private share portfolios. So each individual will have their own bespoke, privately managed, standalone, segregated portfolio. And then that means that we can adjust the portfolio to exactly match the requirements of that individual, from a risk point of view, an income point of view, from the point of view of how much growth they're targeting.
Nick, it sounds like an interesting alternative to the mainstream, if you like, that you have been thinking differently, that you are approaching investments very rationally and very logically, in that if I give you money, I would presumably say to you, I'm a high-risk investor. I like this idea about these investment trusts where I can get $1 worth or £1 worth of assets for 84p. Would you then shape a portfolio in my name of investment trusts that would be perhaps higher risk than the norm?
That is right, yes. So we do have model portfolios. We've got 3 model growth portfolios. There's a growth portfolio. So there's a growth portfolio, a balanced portfolio, and a defensive. So we would chat to you and say, well, how risky do you want your returns to be? This is our growth model, and this is what it's achieved over the last 20 years. These are the years that it hasn't done so well. So we can look at the maximum historical drawdowns, the years where it has done well, and we would obviously explain all the risks and the pitfalls first. And what we do like to do is to under-promise and over-deliver. So the last thing we want is a dissatisfied client. And quite often it takes ages to get to know exactly what a client's risk profile actually is. So we have some people who say, I'm high risk, put me into your growth portfolio, and then it drops 5% and they panic. And we have other people who say, I'm low risk, put me into your low risk portfolio, and it drops 3% or even 4%, and they're perfectly happy with it. So it's a continuous process of understanding what the client is all about. So we've got some amazing wealth managers at Overberg Asset Management, and that is their job, to liaise continuously with clients, to report back to them, and to it's an evolving situation. So yes, I think for yourself, Alec, you're a seasoned investor, so it wouldn't be any trouble, but there are many who aren't.
We have another business partner called Omba, and they focus only on exchange traded funds, and they're really good at ETFs because they analyze the 8,000 of those around the world. From your side, you're focusing on this area of the London Stock Exchange, and it makes a lot of sense. But maybe you can give us some hints of your biggest holdings. You have spoken about Scottish Mortgage, and I think they're in the news quite often because of the early stage. But I was looking through your fact sheet before we started talking, and 3i Infrastructure and 3i Group are the 2 biggest holdings in that portfolio. Can you just tell us about what they are so that we can get a better feel for what exists in this investment trust sector on the LSE that you're actually studying all the time?
So yes, the 3i Group has grown so much over the last few years. We bought it in 2019 after the share was jettisoned from the FTSE or from a big index. I can't remember which index it was. So all the tracker funds, the ETFs, had to sell the share because it was no longer in the index that they were tracking. So created an incredible opportunity for us to get in to what is a very well managed private equity. So it's a listed private equity company, one of the biggest in the world, 18 billion pounds or 19 billion market capitalization. And their biggest, so they invest in 4 different sectors: transportation, IT, consumer services, and also renewable energy. So, and 3i Infrastructure, as a matter of fact, have similar things, but much more utilities and public-private partnerships. And they invest in the UK, Europe, the US as well, in privately managed companies. The biggest holding they've got is a company called Action. It's a money for value non-food retailer in UK, Europe, and it's done phenomenally well. They're growing, well, for the last 9 years, Action has grown its sales, its profits by 57% annualized. So it's phenomenal. It's what 3i Group call a compounder. And they can run the winners. Action now comprises 60-odd% of 3i Group's net asset value. It's very difficult to find companies like that, early stage, high growth companies in the listed markets. So we have quite a bit of private equity exposure in the Overberg portfolios, and 3i Group is the biggest holding. It was a 4.5% weighting in the portfolios when we first bought it, but it's more than doubled in 4 years. Nice problem to have, but it's now almost an 8% weighting. So what should we do? Do we rebalance or do we run it even longer? The probability is that we'll rebalance because we're very conservative asset managers, but we may just wait a little bit longer.
It's such an interesting conversation, and thank you for coming into our Cape Town studio here at the Latitude in Sea Point, where we do from time to time visit when people come in from Greyton. Have you driven through from Greyton today?
I have.
You have?
Yes.
Well,
but
we came from Hermanus. We could have probably met halfway through. But Nick, it's been very good of you to open our eyes to this sector, and long may Overberg Asset Management flourish with the focus that you have here. I'm sure there are some investors who are going to say, all right, let them look after it for us. But I'm sure there are going to be others who say, hang on, investment trusts, good opportunity. There's a London Stock Exchange, more than 300 opportunities for us to invest in. Maybe we should start reading those annual reports. And it just shows you that the world of investments is enormous, and you can never, ever learn everything.
Thank you very much, Alec.
Nick Downing is the founder and chief executive of Overberg Asset Management, and I'm Alec Hogg from BizNews.com.